What is going on, guys? Tristan here. I'm glad to be back on those technical Sunday series, technical content. Today is episode 8 and we are right after the stock market crashes, like the worst crash since I think 1987. So obviously it did not affect the Forex market as badly as it has to the stock market, for the stock market. So this is one of the reasons I love the Forex market, is that we're only betting against we're only betting on currency against one each other, so we can take profit out of any type of movement. So today I'm going to cover one of my favorite pair, which is Euro Yen. So I'm going to cover the technical analysis over this pair, and I'm going to talk about as well what is going to be my strategy focus in this type of financial crisis that we are living in. So how do I trade differently in this type of market situation? So one of the subject will be the yen as a safe haven. So one of my favorite pair is Euro Jpy, and I'm going to talk about why the yen is a safe haven and why it is my favorite currency to trade right now. Then, if we have some times, I'd like to cover the effect on the stock market, the effect of the stock market crash on the US dollar. So I'm not trading especially the US dollar right now, but I think it's important to understand what is going on with the different money inflow and outflow in this current situation. So, and then some gold level that I will be looking at as well in the next few weeks. So we had a hell of a drop in the last 2 weeks in gold US dollar, but I really think that it's time to start looking at gold as a safe haven as well as the yen. So we'll have some nice level to look at in the next few weeks. I'm going to cover them as well in this coming video. So if you like the video, just subscribe to the YouTube channel as well. If you're seeing this on Instagram, you can go on YouTube. The link is going to be in the description, and all those charts as well will be posted in my Telegram channel for free, so you can subscribe to the Telegram channel as well. I am updating every week my watch list with you guys since over a year now, so just subscribe to the channel. It's completely free, and if you have any questions, of course, feel free to drop them down below so I can answer them as well. So enjoy the video. So starting with the analysis of Euro Jpy, so I'm going to do something kind of different today, guys. I'm going to break down the pair from the monthly time frame, just to show you guys exactly where we are at right now, and why I think the pair is going down, and basically understanding the whole picture is always the best idea when trading currencies. So starting at the monthly charts, what we can see is that let's say if we start at the beginning of the May 2012. All right, so this is where I started this analysis. By the way, guys, all those black line here, small black line here, is all back testing. So just in case you were asking yourself what it was, it was only all the time I back test this pair, and I just didn't have time to delete those lines. So starting at August 2012, we have this 3-touch trend line. So 1, 2, and 3, which is the red trend line right here. So when we go back at the weekly, you know what this red trend line is. So now let's go at the weekly. So basically on the weekly and monthly, we were in a bullish market, obviously. So an uptrend trend line. Now starting at here, what we can see is basically this pink line, which is the 200 MA weekly. So we had this break, and remember at the beginning of 2018, this was the flash crash that we had at the beginning of 2018.
at the end of 2019, so beginning of 2019, we had this flash crash right here. So basically we dropped more than, I think, 1,000 pips and came back and retest the 200 MA weekly. So that was a perfect retest, and this is exactly where we started this channel, this downtrend channel of all 2019, basically all the three first quarters of 2019. So what we had here with this downtrend is that we broke down perfectly this red trend line, which was the uptrend trend line on the monthly basis. So breaking down this trend line, we then now retested this trend line. So this is what it was all about, this uptrend channel of the end of 2019. So if we go at the daily now, we will be able to see this perfect retest, and on the daily level it was we can break it down with the Elliott wave pattern, so which are the 5 wave of the Elliott wave pattern. So let's start here, September 2019, the first wave, second wave, third wave, fourth wave starting here, and then the fifth wave ending perfectly at the retest of this monthly trend line, so the red line again. And if we draw our fib or Fibonacci level from the higher high to the lower low, it was also our 618 retracement level, which is the Fibonacci level that usually the market will retrace and pull back pull back all the way to the 618 and then start a new trend, or just keep going with the weekly downtrend that we were starting, breaking down this monthly uptrend trend line. So hope you're following me, guys. It's really important. So basically the orange rectangle right here was the confluence point where I was looking at to end this Elliott wave pattern. So basically for I was looking at that point because of this confluence of the monthly uptrend trend line. So I was looking for this retest, and because of the 618 Fibonacci level on the weekly level. Now coming back at the H4, we perfectly rejected the zone as expected, and you can see, guys, this this setup that I've predicted in the Telegram channel. So I was talking about this break of the uptrend channel right here. So we broke down this uptrend channel. Now I was waiting for any type of retest in that situation. The best retest we could have is the confluence with the 200 MA, the uptrend trend line right here, and obviously this psychological level, which is where I draw this rectangle right here, this key level of 121.00. So here, perfect retest, perfect short entry, which I've called in the Telegram, and that was the reason for it. I know I've explained you guys, but I'm just repeating myself here for people that haven't that wasn't there at that moment. So perfect short here. We continue to go lower. Then the reason why we've come up and retest this zone, we've went a little bit higher here. If we go back to the daily, well, it was a good occasion to retest now the daily 200 MA and start the second point of this trend line, this blue trend line. I've just drawn right here. And so basically we can at that point we could have think that we were started to create this downtrend trend line. So this new downtrend channel. So basically, we were going back in a bearish market, coming back at the H4, we created a new low, which was almost as the last low of September 2019. So retested twice, created support. Now, since that point, last week was only consolidation. So kind of a messy market. Consolidation, we were consolidating between those two support, bigger one here, smaller one there, and the 200 MA still going down. So what I've did here basically, and this is the reason I've started to take back short position, starting at this green zone right here, 19,200. If we go back, we see 1, 2, 3, 4 touch, and basically in the H1 time frame, we see that this zone 1, 2, 3, 4, 5, and 6 and 6 touch on Friday. Basically, this is a nice resistance level, which goes again in confluence with our 618 Fibonacci level if we draw it from the high here to the low right here. So perfect zone to take some short entries, which I've did small short entries over this week, because I'm shooting this on Friday, but I'm going to release the video on Sunday. So this is where the market is still moving. So basically, those are my short entries, and I'm still expecting that there's a small chance that we go back up here, break the 618 and green zone, and then go revisit the 19,800 120 zone. So there's still a small chance, because we still have this new downtrend trend line that could be retested. So still a small chance that we go back there, but if we do, obviously I'm going to take a short there and hold my other short position in a small drawdown, but this is already calculated in my risk management, so I really don't mind it. So there's still a small chance that we go back, but either way, if we go back up or we just drop from here, next target for me will be the last low that we did in March 2020, and hopefully we will break those support, break those low, and go revisit the extension 27.2 right here. If we go back to the daily time frame, so those are the smaller target, extension right here, 61.8, and final target for me for this downtrend will be the 112.00 target. So if we go back and we follow up this blue line, this is the last monthly support that we've observed in 2016. So this is where I think we are going with this pair right now. Obviously the fundamental help is a lot in favor of the yen. Huge economical crisis have just started, so the yen as a safe haven is most likely to appreciate a lot, and the euro on the other hand is obviously not going to appreciate. The economy over there is not going well, and for many factors, but one factor that is obvious to me is the interest rate, which already is at 0, and QE the Federal Bank of Europe starting back QE, which is most likely to not work, is a huge point to me that that first of all the economy is in a downtrend, so it is not going well, and they don't have any more tool to stimulate this economy. So for me, there's no place else to go than just going down. So shorting the euro against the yen has always been great to me because for me, it just makes a lot of sense, and I like to play I like to play with the yen as a safe haven, and mostly when there's economical crisis like we are living right now. So a lot of fear in the market, a lot of fear in the world. I'm not saying that I'm taking profit out of this fear. Obviously, I don't like what's happening out there, but in the market, it's a whole other thing for me. So I'm focused on what's working, and this is basically what's working for me. So I hope you like this analysis. Now I'm going to cover some other subject. Starting with the yen as a safe haven. So now, guys, I'm going to explain you why the yen is a safe haven at first. So basically, my main focus for the next months will be trading the yen. So we'll be taking position against other currencies and in favor of the yen, right? So hence the reason why my favorite pair for next month will be Euro Jpy. But I'm going to explain you fundamentally why it is a safe haven. So if we go on Trading Economics, which is one of the best data website here, we can sort of look at all the countries in the world in terms of debt to GDP, right? And we can see Japan is at the first position right here. So with 238 percent of debt to GDP ratio, which means that Japan is the most in debt country in the world. But one of the things that there's not a lot of people that knows that is that 100% of this debt, almost 100% of Japan's debt, is owned within the country. So it's basically government and rich Japanese people that owns this debt, right? So it is not owned by the US, it is not owned by Europe, it is owned almost 100% within the country. So it means that even though if Japan is the most in debt country in the world, they don't owe money to anybody else, right? So here I found a great article that explain well why is the Japanese yen a safe haven currency. So it is an article by Financial Sense Wealth Management, and it has been written by Matthew Kirchhoff. So here I've downloaded it and just basically highlighted the most important point of the article. So here on this paragraph, he says that Japan has always been a large exporter and has continually exported significantly more goods and services than it imports. So basically he is referring to the balance sheet of the country. Here he says as well, the result has been decades of current account surplus that have positioned Japan as a net creditor to the world. So what he says here is really important. Basically, I'm sure you've asked yourself when we are talking about a country's debt, let's say for example the US debt, which is significantly higher than most countries in the world. So who owns this debt exactly, right? Who like if the US is that much in debt, to whom is the US owing this debt, right? So most of the time is to central banks, other foreign central banks, and countries. So here, Japan, it's like nobody owes money to. Japan don't owe money to anybody else. To no any foreign countries, but everybody else owes money to Japan. So if we look at the US debt, for example, a large percentage of this debt will be owed to Japan. So one of the reasons is that, as he explained here, so Japan has been a large exporter in the world. So a lot of people bought over the years a lot of things to Japan, and so they owe a lot of money to Japan, and they bought on credit basically since over 30 years. So here he said as well, the value of foreign assets held by Japanese investors is substantially higher, than the value of Japanese assets owned by foreign investors. So here again he says that most of foreign investors owes money to Japan, and Japanese investors they own basically this foreign debt from everybody else. So this places Japan as the largest creditor nation, a title it's held for the last 25 years. And it has been around 25 to 30 years that market has considered Japanese yen as a safe haven. So basically, let's put it this way, right? So there's a financial economical crisis, and there's a lot of fear in the market. And as an investors, most of your assets is let's say, for example, in the U.S. stock market and in U.S. dollar. So obviously, if you have less if you have less confidence in the U.S. in the United States, and you want to take out your investment from the country because the country is doing badly, right? Because there's a financial economical crisis. Obviously, you're going to look at the U.S. debt, and you're going to ask yourself to whom this debt is owed, right? And then there's the Japanese yen that a large percentage of this debt is owed to Japanese people, to the Japanese country. And also there's the fact that Japan is the only country in the world that everybody owes money to Japan, but Japan don't owe money to nobody, basically. So it is the reason why most investors will look at the Japanese yen as a safe haven in those kind of events. So they will put out their money from the U.S. stock market, from the U.S. assets, and invest therefore in the Japanese yen. And that's the reason why basically it has become over the years a safe haven. So lastly, I'm going to explain you guys what is really happening right now, and the reason why the US, basically the DXY, the US index, has been making higher highs since the last weeks in correlation to the stock market crash. So and also the reason why we had a hell of a drop in gold US dollar. It's all correlated. So basically, if we look at the S&P 500, which is the orange line right here, we see a direct correlation with the crash of the S&P, so the crash of the stock market, and the DXY continuing to make higher high in the last 2 weeks. So basically, just imagine yourself a market cap of like the S&P 500 has maybe at the beginning of the year it was at 28 trillion, right? So 28 trillion in the S&P 500 of market capitalization. Now there's 30% of this market cap, which was about at 30 trillion by the time we made the higher high of the market. So 30% of this market in less than 3 weeks has been liquidated. That means that people have sold their stocks and liquidated their stocks into the US dollar, obviously. So that made $10 trillion that in less than 3 weeks have gone from market cap value to the US stock market. So people were liquidating their stocks into US basically. So I found out a good article here that explain pretty well what is going on right now. So basically people are on a winning position in the market, and most of those people remained this stock liquidation in cash in US. So basically it's a lot more, it's 10 trillion more in the market of in use of the US dollar basically. And it also explained here outflows different product like stock and inject this liquidity into safe havens. So like precious metal, JPY, and CHF, just like I've explained you guys with the yen. So this is the direct correlation with the stock market and the US dollar. And now gold, now for his part, basically if we go at gold here, I'll need to delete that. All right. So we had I think it was about like 23,000 pips drop in gold in the last 2 weeks. So basically the fact that the US dollar was appreciating a lot in the last 2 weeks, there's a direct correlation between gold and US dollar. One of these reasons is that because I think it's like 90% of gold exchange in the world is quoted against the US dollar. So every time the US is appreciating, gold has to depreciate, and same with by the time gold is appreciating, usually the US dollar is depreciating on these charts. So but now we all know that gold is a safe haven, and if there's a recession really coming in the US and on the global market, obviously the US cannot appreciate like that forever. So it will eventually depreciate, this is my guess, and gold as a safe haven will eventually appreciate, because every time there's a recession or a financial economical crisis, obviously the oldest safe haven that exists way before the yen was gold. So this is why I start looking at some level at gold, because I think we are going to see in the next few weeks a reversal of this pattern. So basically here, by the way, we've just touched the 1450 monthly support, so that we are exactly at the last low we were in November 2019. So that may be a good support for gold, and we may start seeing this switch in this correlation, and maybe we will start seeing gold starting to appreciate back up, and we'll be able to find good entries. But if we break down this 1450, because there's a huge possibility, there's a high possibility that the stock market will keep going down from here, but obviously they will have some retracement, but I'm not sure that there will be a crash as fast as we had in the last 3 weeks from there. So that may give a better chance to gold to appreciate it. So if we break down this monthly support, I'm going to look at this monthly blue uptrend trend line. So maybe we'll go and touch this trend line, or just start forming any type of structure around 1450 and 1550 right here. So those two levels are critical, right? So monthly support, monthly resistance here, monthly level. Maybe we'll form a structure. We could break this support and reach this trend line right here, or completely pull back from this monthly support and start going higher from there. If we do, I'm going to start looking at 1515 level right here, 1550 level right here, all the way up until 1650 level. So if we do break up this 1515 level, that's where I will be looking at some long entry, and I will be confident, because obviously if this financial crisis is continuing to affect all the global economic, which I think it will, gold, there's a high chance that gold will appreciate and reach again the 1700 monthly target that I've placed right here, and even go higher. So this is my guess for gold, guys, and this was my explanation of the U.S. appreciation in the last few weeks. Just drop your comment below if you have any questions. Of course, those charts will be posted in the Telegram channel as well. And guys, I wish you guys an happy week. Trade safe. Keep up with the news. Don't do anything foolish. And till next time, guys, I'll see you in the next video.